Good morning and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you've got any questions, ask them in the comments in the live feed. At the end of the session, if you need any more advice and you haven't already done so, please join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with that, and I'll reveal the result at the end of the show. And finally, just a one-off notice for you, to celebrate National Payroll Week, QuickBooks are offering 75% off QuickBooks Online and payroll for 4 months. Make sure you follow the link in the comments to find out more. Welcome to today's show. For those of you who haven't seen me before, my name is Judith Dugdale. I'm a chartered accountant and I do a monthly slot on Ask the Expert. So hopefully some of you will have seen me in the past. As I said, I'm a chartered accountant. I'm based up in the northwest of England at a firm called MHA Moore and Smalley. And my role within the organisation is Head of Digital Solutions. It's quite a fancy title, but very simply what it means is that I look after clients who use cloud accounting software. And the team that work with me review their QuickBooks information and prepare management accounts, annual accounts. We do the corporate tax returns and personal tax returns. On top of that, we use other applications that link into QuickBooks to do ongoing strategic advice, reporting on performance, and try and basically sit down with clients and work out how they can get more out of their business, how they can retain more profit, and how they can pay lower amounts of tax. The other area that our team look after is when a new business comes along, we hold the hand in terms of setting up a QuickBooks license, training them on how to use the software and providing ongoing support so that any queries that they may have regarding the software we can deal with. We also do this across the firm in general. So it doesn't really matter where that new client comes from. We are the team that will help set up that digital accounting process. MHA as a firm is a large independent firm of accountants and based across the whole of the Northwest. And we deal with new startups, which tend to come into my team, all the way up to large multinational companies and subsidiaries of international organisations. We therefore have a wide range of services that we can offer our clients, from your general day-to-day help to specific special tax queries. We have independent financial advisors, and we do things like outsourced bookkeeping, and we have an outsourced payroll team. The reason I mentioned the outsourced payroll team today is, as I mentioned earlier, it's National Payroll Week this week, which is quite ironic given the government's recent announcement in the last day or so of the increase in national insurance and the likely, well, it's definitely coming in, the social care premium that will come through in 2023. What I thought I'd do today, just before I answer any questions, and because it is National Payroll Week, is just run through what payroll is, how you can get that easily set up, and when you should use payroll and when you can't use payroll. So payroll is the mechanism for paying staff members of your business, and it means that you deduct pay as you earn, national insurance and pension contributions where needed at source so that your employees get their net pay. You then, as the organisation, the employer, you then pay the pay as you earn and national insurance and pension contributions over to HMRC or the pension company on a monthly basis, and information is reported directly to HMRC and the pension companies directly. So not everybody needs a payroll scheme and not everybody should have one. So the people that don't need a payroll scheme are the self-employed and any sole traders out there who don't employ any other staff. So if it's just you running an unincorporated business, so that might be that you're a consultant and you file your income on a self-assessment tax return, or you're a small business, but you've not registered as a limited company and you don't have anybody else working for you that you pay directly. you not only do you not need a payroll, you can't have one. When you're self-employed or a sole trader, you are not a separate entity to the business that you're running, and therefore whatever income comes into that business is deemed your income, and you will get taxed on the profits of that business, and therefore you can't put through a salary through payroll. However, obviously lots of other businesses out there do and could need a payroll. So if you're a limited company, or you are a sole trader, for example, but you employ people, you need to set up a payroll scheme to make sure that those employees, and it could be yourself if you operate a limited company, are paying the right levels of pay as you earn and national insurance, and indeed pension contributions too. It's really very simple to set up a pay as you earn scheme. You just need to go to HMRC's website, so that's all under gov.uk now. And in fact, if you Google, how do I set up a pay-as-you-earn scheme, the very first option that comes up is register as an employer. To register as an employer, you will need your self-assessment number if you're a sole trader, and you will probably need your national insurance number as the owner of that business. If you're a limited company, you will need your corporation tax number, and again, you will need your national insurance number as a director of that company. It takes minutes to register the pay-as-you-earn scheme online, albeit it might take 2 weeks or so for you to get the actual code through. The more difficult thing is, how much do I pay people, when do I pay them, and how do I record it? So looking at the how do I record it, you have to use software now. It used to be that you could use manual records to record payroll, the amounts, the gross amounts and the deductions, and you could fill in forms and send that off to HMRC. That no longer is allowed, and it hasn't been allowed for probably a good 5 years now. There is something called RTI, which is real-time information, and that is something that came into law, brought in by HMRC to ensure that employers recorded electronically any deductions that they were making on behalf of their employees, and that they were sending that information through to HMRC on a timely basis. The information that you send through details all your employees, it details all their details in terms of where they live, their national insurance number, how much their gross salary is, and what deductions you have made in terms of pay as you earn, national insurance and pension. That information goes directly to HMRC, so they then know the amount of pay as you earn and national insurance that you have to pay by the 19th of the month following your payroll run. You can run a payroll weekly, you can run it fortnightly, you can run it monthly, and you can actually do a quarterly payroll as well if you wish. There is the option for director-only payrolls to run them once a year in March, but that is only if it's a director-only payroll. You can choose to pay your staff in whatever frequency you wish, but you do need to make sure that it is registered through the RTI and that the payment is following the submission of the information to HMRC. If you happen to pay somebody early, maybe one of your employees needs a cash advance, you could give them the cash advance, but then you need to show that as a prepaid deduction on their payroll information. It's by law that you have to send your employees a payslip, and at the end of the year, you have to send them a P60. In addition to this, if you have employees and you give them any benefits, you also have to do what we call a P11D, which is a disclosure of benefits in kind. So that could be if you provide a car, or maybe you pay for your staff's mobile phone bill, or maybe you give them a gym membership or private medical. All these items are what we call a benefit in kind to your employee. So you do need to disclose these on a P11D annually, and there is national insurance for the employer to pay on those as well. So in terms of how you do all that, it might sound a little bit onerous, and you might think, how am I going to be able to control all this? It's going to cost me a fortune. Well, the good news is at QuickBooks Online, if you already use that for your bookkeeping, they have 2 versions of payroll, a standard and an advanced version, which will basically do absolutely everything you need it to do. The standard works on more standard payroll frequencies like a monthly or a quarterly payroll. The advanced allows you to be more flexible, so you could maybe have some stuff on a weekly and some stuff on a monthly. The system will work out the pay-as-you-earn and national insurance for you. It will automatically update when your employees get different tax coding notices. And in addition to that, it will calculate the pensions that you need to pay. So just very briefly on the pensions, a few years ago now, we had to comply with working pensions arrangements. And basically, this is where the government decided we had to change the way that we paid employees' pension contributions, because it was a very voluntary process. So employees could say, yes, I want to pay into my pension, no, I don't. And employers didn't have to provide one. It was almost like a perk. And that this was meaning that an awful lot of people were retiring without any pension pot at all, other than the state pension. So the working pension arrangements mean that anybody that earns a certain amount of money, so it was £10,000 a year, you have to be automatically put in an auto-enrolment pension scheme and have deductions made on your behalf. And you also, as an employee, have to make contributions into that pension scheme. Now, some people still don't want to do that, and they can opt out. But as an employer, it is your legal responsibility to set up that pension scheme, be it with Nest, People's Pension, if you want something fairly straightforward. But you have to set that up, and you have to make sure that you put your employees in, and you cannot encourage them to opt out. So that is an extra cost for anybody out there that is employing people or thinking of employing people. You just need to understand that when you do employ people, not only have you got to pay their gross wages, you have employers' national insurance, which is 13.8% of their salary. There's a period of £8,800 where you don't pay that, but once you go over that mark, you're paying 13.8% of their gross salary as employer national insurance contributions, and you also have to pay the pension contributions as well. So that's just something to bear in mind if you are thinking of maybe employing people. So that's my little bit on payroll. Hopefully there's been something in there that's of use to you. What I'm going to do now is just jump into the questions. Feel free to ask me anything to do with what I've just discussed on payroll, or anything to do with QuickBooks or in business in general. Thank you. So the first question has come through from Jasmine on Instagram direct message. Jasmine says, I send monthly invoices to my clients and charge them the straight invoice price by using the pay online button. Is there a way to add fees on invoices for credit card payments in QuickBooks? So Jasmine, what you can't do is, you could send them a separate invoice for the charges, depending on whatever they may be, because obviously depending on the invoice amount, the charges will probably be different, but that's a bit of a faff. And then you've got another payment to come through, and then there's probably charges on that payment. So what you can do is work out what you think the charge will be, and you can add that as an extra line within your invoice when you send it. What I would just say, just to be cautious on that line, is that some of your customers, depending on what it is you do, some of your customers may be a bit frustrated at that extra charge. So just have a think about that. Most businesses don't pass on that payment charge. The idea of the pay online button now is that you get paid quicker. And the idea is that because you get paid quicker, you can forego that little bit of a charge because your cash flow is more positive. You obviously don't have to use that pay online button. You could put your bank details on your invoices and get them to make a BACS transfer or an online transfer to you where there wouldn't be any charges. And like I said, you could add an extra line within your invoicing. You set it up as a service within QuickBooks, online payment charge. You pop that into your invoice, and then obviously it would be covered within that. But like I said, I would just be cautious about instantly adding something like that, because a lot of customers will assume that is just a cost of running your business, and they don't necessarily want that passing on to them. However, if you do an awful lot of sales that are coming through that way, and it's eroding your profit margin, then it's something to look at and something to maybe trial for a few months. If there's an adverse reaction to it, you can take it away. If nobody seems to be bothered by it, then you can keep it in. But yes, there is that option of adding in an extra line on your invoice just to say that it's fees for credit card payments. The next message is Julia on Instagram direct message again. Julia says, I just opened a salon in the last 3 months with 2 members of staff. Currently, I pay them cash in hand. Should I set up and add them to payroll? So, Julia, this is a brilliant question. I'm so glad somebody's asked this. It depends is the answer. So if you're open a salon, I presume it's like a hairdressing salon or a beauty salon. And in this respect, this is fairly different to most other businesses. So what happens in the beauty industry an awful lot is that people have a rent chair. And that scenario means that you give somebody the space to operate their beauty services, be that hairdressing, nails, whatever it might be, and they pay you a fixed amount every month to rent that chair effectively, so that they don't have to go and set up their own beauty salon. On that, if they're doing that, then they are what we class as self-employed. So they should, the money you give them in terms of how much they get each week or month as that cash in hand payment, they should be registered with HMRC as self-employed, and they should be declaring that income as their earnings on their self-assessment return, and then they pay their tax every January and July on the basis that they're self-employed. If they are not renting a chair and they are not declaring their income, then they need to go on a payroll, and you will have to set up a pay-as-you-earn scheme and put that money through as their salary. Now, this obviously means what you're giving them as their cash in hand now, they will get less in their hand afterwards, but you're deducting their pay-as-you-earn and national insurance, so they don't have to pay that over later. So what I would say is you need to just have a think about what they're doing. And actually, if they are not renting a chair off you and you're thinking, right, I'm going to have to put them through payroll, before you agree that, maybe have a discussion with them. Would they rather be self-employed or would they rather be an employee? One other thing to note is if they're going to be an employee, they have rights as an employee. They're entitled to sick pay, holiday pay. As I said before, you have to pay them pension contributions. So it will be quite a bit of an extra cost to you from what you're paying at the moment. From their point of view as an employee, whilst they get those benefits of holiday pay, sick pay and pension contributions, they are taxed slightly heavier than if they were self-employed. So it's probably worthwhile sitting down with them and seeing which is the best route. I would also recommend that you speak to your accountant and see what they advise is the best route. And they may well be happy to come and sit down with you and these 2 members of staff and see which is the best route for all 3 of you. I hope that helps, Julie, and I hope you get it sorted out. The next message is Sam on Facebook Messenger. Sam says, on top of the annual leave entitlement, I want to reward staff with additional holidays for good performance. What tools can help me track this? So Sam, that's, first of all, that's a lovely thing to do for your employees. I think it's something that people really appreciate, and particularly with what we've been through in the last 18 months and a lot of people working from home and probably having a little bit more work-life balance in the balance of life, as opposed to all the travelling people have had to do to and from work. People then returning to the office, they've seen that impact, that time with their family impacted, or time with pets, whatever it might be. So actually the reward for good performance of having extra days holiday is a really positive thing, and I'm sure your staff will really appreciate it. In terms of tracking this, you can do a very simple tracking mechanism of using a spreadsheet. What you need to do is make it very clear when people can get the extra days holidays, so that there's no way that somebody could say that you've discriminated against one employee versus another one. So it might be, these are the budgets and these are the targets. If you hit these, then you're entitled to an extra day a year. Or it might be, once you've been with us for a year, we'll give you an extra day's holiday. Once you've been with us 5 years, you get an extra 2 days holiday. Whatever it is, it needs to be written down in a contract of employment. It needs to be visible in an employee handbook so that everybody is aware of it, because what you can't do is fall foul of giving one thing to one employee and not to another, because it will bring into account discrimination proceedings. In terms of tracking it, most people will do something like this just on a simple Excel spreadsheet, tracking the employee, the number of holidays they have at the moment, what the target is, how many they could get, and obviously logging when they're having those holidays to make sure that people don't go over. There's also loads of apps out there that will allow you to set up your employees, put in the holiday entitlement, and be able to track when they're taking those holidays. Some free, some you have to pay for. So what I would do is have a look out there at the various different apps that you could use, so that you can see which one is the most cost effective for you and which one will allow you to work your holiday entitlements the way you want to work it. Rebecca on Instagram, direct message, has asked, an employee has asked to extend their paternity leave. I'm happy for them to take the time off, but I can't afford to pay them for the duration. How can I manage this? What are my legal rights and their legal rights? The first thing I'll say, Rebecca, is I'm not a HR expert, so I strongly recommend that you take some HR advice. There's loads of there's lots of information out there that you could probably gather for free. I'm trying to think of like Citizens Advice can give you information like this at a very limited level, and then there's businesses out there like Peninsula and others that would, for a fee, give you lots more information. Very simply, you say paternity leave, and obviously this is very different to maternity leave. So paternity leave currently, as I understand it, people only get 2 weeks off. And that 2 weeks is, you can claim paternity pay for them, and they don't get their normal full pay, they get the paternity pay in their pay packet. I also, as I understand it, legally, parents can apply for longer parental leave if there is a need for it and if the business can sustain it. This is unpaid leave though. So if your employee has had their 2 weeks paternity leave already and they're asking for some extended time off, that is absolutely fine if you as a business can stand them not being in, but you do not need to pay them paternity pay. They would be paid under unpaid leave, or they could take it as holiday, in which case they would obviously receive a salary for their holidays. That is their legal right to ask for it. Your legal right is to decide whether it fits within your business, and there is no legal right for you to pay your employee for extended paternity leave. But as I said, I'm not a HR expert, but I need to caveat that these rules change all the time. So I really do recommend, I would actually Google what are my legal rights when an employee asks for extended paternity leave, and you will come up with loads of responses on there and probably links to some professional HR organisations that can give you something in writing, or give you some wording that you can pass on to your employees so that you've covered everything at your end. So I hope that works out for you, Rebecca, and I hope your employee is happy with it as well. Next question has come through on Instagram direct message, and this is from Laura. Laura says, I teach yoga classes over Zoom, but I'm thinking about expanding my business. Do I need to set up payroll now whilst I'm working alone, or shall I wait until I've hired someone? So Laura, this comes back to what I was touching on at the start, depending on whether you are what we class as a sole trader, self-employed, or whether you are a limited company. Now, I'm going to guess that if you're doing yoga classes and your business is fairly small, because you said that you're thinking about expanding that business, I'm going to guess that you're self-employed, and therefore you're declaring your income every year on a self-assessment tax return. If this is the case, you can't set up a pay-as-you-earn scheme yet. You need to wait until you've got some members of staff that you need to pay through payroll. If it's just you by yourself at the moment, as a self-employed person, you can't pay yourself through payroll. It's just not something that you can do. As soon as you've hired somebody, you will need to apply for that pay-as-you-earn scheme. Now, when I say you can't set it up now, if it's imminent that you're going to be employing somebody, so you know within the next month or two, I would apply for the pay-as-you-earn scheme number now, and then when they start, you'll already have that information. You can get the payroll up and running. The reason why you don't just set one up just in case is because once you apply for a pay-as-you-earn scheme, HMRC expect to see monthly returns coming in. Under the pay-as-you-earn and national insurance reporting rules, the RTI rules that HMRC has set out, if you fail to send in your RTI on time, then there are penalties. Now, obviously, if you set up a pay-as-you-earn scheme and you've no employees yet, then the penalties would be waived, but you will get letters off HMRC asking you why you've not submitted any information. And that is why we say don't set up a pay-as-you-earn scheme until you are ready to employ somebody. If you are actually trading as a limited company, and Laura, you are the director of that limited company, you could set a pay-as-you-earn scheme now, and you could actually put yourself a salary through that. The reason why we would recommend doing this as a director is that everybody gets a state pension when they hit retirement age. But that state pension, you could get the full state pension, or you might get less, depending on how many years you have worked and paid national insurance. So this is where some people who work self-employed and are not necessarily paying enough national insurance, or more importantly, people who are a director of a limited company and only take their money out as dividends, they are not actually in the system as having paid any national insurance in that period. So we recommend you set a payroll scheme up as a director. You pay yourself a small salary. It's around about £8,000-9,000 a year. And that means that you are in the system as an employee, and therefore you get a year's tick towards the state pension. I would recommend that you speak to an accountant about that, just to make sure it's right for your circumstances, and hopefully you'll get the right advice and you can roll that out. So I hope that I've answered that in a long-winded way. Jonathan sent a message on Twitter, a Twitter direct message. And Jonathan says, a lot of my staff didn't take their annual leave during lockdown. How can I manage this and encourage them to take it? Should I allow them to roll days over on top of the 5 carry days that we already allow? So Jonathan, this is really interesting. And this actually happened at the firm of accountants that I worked at, because lockdown was very, very busy for accountants. And obviously people couldn't actually go away, so we're less inclined to take 2 weeks off in the summer. We had this issue. Now, what we did is we normally allow people to carry 5 days over. We allowed them to carry over an additional amount of holidays if it was obvious that it was due to the pandemic that they couldn't do it. So people could carry over up to another 10 days, but the rules were kind of that you need to have a plan in place on how you're going to use them. And it was for a 1 year carryover only. So if people don't use all of those holidays, including their current year's allowance, this year we will go back to just carrying over 5 days. So it's actually up to you what works best for your business. Not all businesses can afford to allow everyone to carry loads of holidays over. But equally, you don't want your staff to be disadvantaged on the fact that they've worked really hard during a pandemic and not been able to take those holidays. Therefore, I would sit down with them and discuss what they feel is the best option. I know what we've done with some people is we have allowed them to maybe for so many weeks work 4 days a week instead of 5 to use up some of those holidays. So that's an option. Also cut people's days down slightly so that extra holidays they didn't take spread over weeks and months of the year. So yeah, have a think about it and see. And I would engage with your staff and see how they feel and what it is that they would like to do. Because you might find that people have a plan that they would like to follow, but they just haven't communicated it with you yet. So good luck with that. I know it's not an easy thing, but hopefully you'll find a way that suits your staff and suits you as a business too. So in the poll today, results are in. We asked the question, do you operate a payroll? 20% of you said yes, 70% said no, and 10% said that you will do in the future. So that's really positive that there are 10% of you watching this now that are of the opinion you're going to be employing people soon and therefore will need to set up a payroll scheme. So as I said, my advice to you guys is set up that pay-as-you-earn scheme as you are ready to take on the employees. It's as simple as Googling, how do I set up a pay-as-you-earn scheme? And you will find the link at the top of the web search. And as I said, it doesn't take long to process it. For those of you who answered no, that's absolutely fine. You may well not need one, but hopefully today you found out the reasons why you may need to take one in the future. And to the 20% of you that are doing the payroll, keep going, and it's fantastic that you're employing people and helping the economy grow. So thank you very much for all your questions today. It seems to have gone really fast and we have run out of time. If you'd like to find out more about setting up your own business or help on payroll, then please visit our website, which is www.mooreandsmalley.co.uk. Got loads of information on there and an insight area, lots of videos and blogs that might help. You can also email me direct and my team at digitalsolutions@mooreandsmalley.co.uk. Be happy to reply with any answers that would help your questions. And finally, just to say, coming up on Ask the Expert tomorrow is Ketan Makwana. He's a business strategist and CEO of Enterprise Lab. Please tune in to learn all about future-proofing your business. Just a reminder, any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. And don't forget, as it's National Payroll Week, QuickBooks are offering a massive 75% discount on the online and payroll for a whole 4 months. The link is in the comments. Have a great day, everybody, and I hope the week is fantastic.